Well, hello traders, and welcome back to another trading week and another daily watch list. Well, today we are going to have a look at the entire broadness of markets that I have here on the right side of my screen. This is the 10-year, the T-note futures chart. And we're going to start by looking at this because of this interesting daily candle that is printing at the moment, right? If you understand how treasuries work, where treasuries go down whilst inflation goes up, right? We don't have any products on our MT4 to trade T-note, but it's always good to have a visual of what's going on, right? After the past couple of weeks, when it was announced or hinted by the Federal Reserve that they were going to hike at least twice before 2023 or not before 2023, but by the end of 2023, you can see that we have hit that very key level where T-notes were rejected back in May, and the printing or the daily candle is printing extremely bearish too. The 4-hour chart is engulfing the 4-hour candle is engulfing the last 4-hour. This 4-hour candle is engulfing the last 4-hour candle, right at the top of the the last 2 weeks ranges, right? So if price comes back down inside that range or breaks with the daily lows, then we can know for sure that we are going to keep on moving lower, at least to test the weekly pivot and so on. Now, the reason that I want to say that, or that I'm looking at that, is because of some opportunities that we might have in metals, right? So let's have a look at the DXY. The DXY insane run, right? Since last Thursday, we are up 2.12% from high to low. Today, we are down minus 0.21% on the US dollar or the DXY. I want to show you the hourly on the DXY because I think it's important to understand the structure that this market is trading in. Now, this is only fundamentals, right? So, I'm sorry, just technicals. So, we are going to look at this pattern that the DXY is trading in, right? So, if we look at where it's trading and the pattern that it's trading in, well, you can see that we are actually trading at the top of that structure, the bullish structure that was created from those, from that breakout, right? From the breakout of the 1960 level. So, where is this structure headed? Of course, we are in a very bullish market at the moment, in the US dollar, right? But if you look at those targets that we have hit to the upside, why don't we grab this, grab us a Fibonacci tool. I reckon we are around the 261.8 of the range, right? Of the range that we were trading in. And right there, you can see that we have hit that 261.8 at the top of the move, at the top of this structure. Now, if structure speaks anything, what I'm seeing right now, if the DXY breaks with the daily lows, well, it already did broke with the daily lows. If you notice here, the daily lows are the current lows. We already broke with the daily lows right here, but if price action is looking like it rejected heavily last week's highs and today's highs again, right on this last 1-hour candle. So we might continue down to retest that weekly pivot and the previous broken level around the 91.80 before going further higher, right? So this is what the DXY looks like on the 1 hour, right? So why don't we have a look at what news do we have here today? Right, so today PBOC summons banks, well, this or virtual currency trading. We haven't had anything on the wires, that had hit the wires that could, in fact, be important to us. Let's have a look at the Forex Factory calendar, if it loads, right? So today there is a there isn't any news today from the US side or the European side, but let's have a look at the entire week. Apply settings. Right, so we do have German flash manufacturing PMI and the flash manufacturing PMI from the US, and we do have that monetary policy statement and the QE pace decision from the Bank of England. And that's about it for me, right? There's really nothing that I am looking forward on that side. So as you can see, the DXY continues to move down. We are going to look for some US dollar sales in the very short term. Let's have a look at gold. Gold is looking pretty bullish from a long-term perspective. Now, let me explain what I'm saying here, right? So this is a massive key level. The 1770 is a massive key level for gold. This is where that flat triangle broke. And not only that, but this is where we encountered buyers the last time that we were here. And after that double bottom that we hit on the 1677 level, this is the level that we broke with and where buyers jumped in. And this daily candle is looking extremely, extremely bullish. Gold is up more than 1% for the day. The 4-hour candle, the 4-hour chart, the 4-hour chart is looking, it's also bouncing from the lows, but it's looking like a W pattern is forming at the bottom. We won't be out of the woods until we break with the previous high and that weekly pivot. But let me show you the hourly, because the hourly looks like a pattern has just broke, right? Now, if we look at what's going on here, this looks like a falling wedge at the bottom of the move, right, where we have hit some interesting Fibonacci targets. Again, let me grab that Fibonacci retracement tool, and we are going to do the we are around we should be around the 161.8 of the previous move, or the 261.8, of the previous move, right here, around the 261.8 of the previous move. We have hit some very interesting targets again, and we are at the very lows of that oscillator, printing some heavy bullish divergence. This is only on the technical side, but also on the technical side, we just saw that the US dollar is looking weak today. Now, I wouldn't go long right now, right? If you didn't catch this from the bottom, I wouldn't go long right now. But what we will do is we will look for buys at the retest, at the break and retest of the 1800. This will give us a better risk to reward in order for us to hit those targets at the next key level around the 1848. Silver, same thing, silver. Very, very interesting daily candle at let me just delete this, at the previous key level, right? Massive key level in silver right here. We saw that later by the end of the week last week, around the 2578, and on the hourly also looking very, very reversal, right? This move in silver might be the one that we want to trade actually, and we could in fact be trading a let's calculate it, because this looks even better than gold. And we might have here a better risk to reward ratio on a trade. Now, if we want to swing trade this move, we should be looking at putting our stops below the daily lows. And in my opinion, this would only be a profitable trade if we were looking to buy into a breakout of today's highs and a retest of last week's lows at around the 2720 level, which is, well, I have it around the 27 level. Hold on, I'm sorry about that. Right here. Yeah, around the 2720 level. This is where I have my target. This would be the trade that we will be interested in making at the break of this reversal. At the break of this reversal structure, right? We just need some bullish momentum to hit the markets and a break of the previous highs and today's highs. We do have some massive bullish, again, bullish divergence printing on my oscillators. So this is a good setup. I will be sending this in a while. Now let's finish up with some major currency pairs. On the daily, the Euro USD looking again like it's bouncing from the 1860 or so. You know, the 4 hour. This doesn't. I mean, the hourly looks like a reversal is in play since we printed some flat bottoms. But again, I wouldn't be interested in buying unless we break with Friday's highs. Let's have a look at the US dollar versus the yen. The US dollar versus the yen. Again, we have some very good bullish price action, but to me, this move, I mean, the lack of momentum to the upside, and then this move to the downside, which broke with the previous lows, it's not looking very much like a long anymore. The pound versus the US dollar, now the pound versus the USD is looking very bullish. From the bottom of that move, around the 38.15 level, we could be looking, in fact, at a reversal on this market. But sadly, that move is gone. Our entry would have been right here at the break below, at the break of the previous highs. That move is gone. We missed it. The US dollar, Canadian dollar. The US dollar, Canadian dollar. Let's have a look at that. All right, so the US dollar, Canadian dollar, we could have our sell stop again activated on the US dollar CAD. And I think that we are going to look for those sales on the US dollar CAD, just because we are reversing from that, from this previous base. So I'm going to send that signal right now. And then let me pause that. All right, now that that is done, I will, yeah, look at the daily for this. Pretty damn good, short, if you ask me. Should this scenario play out, we will look at least a pullback to the 123.20 or so. I know that our targets are at the 123, which are these previous highs. But we will be looking at price action if and when we hit the 123.40 or so. I'll write an analysis on that US dollar CAD, of course. New Zealand dollar, the Kiwi. Well, what I don't like about the Kiwi is that we breached with that key level, right? I mean, we are back inside of that range, but you know, that daily candle, that daily close was so bearish that yeah, that I am not too comfortable with a long on the Kiwi. The Aussie, on the other hand, again, the same thing with the Aussie. We breached that key level, but the Aussie still has that very low that we printed on December 21st as the next key level. On the other hand, there is absolutely no level to trade from on the Aussie side of things. So I'm not looking too heavily into buying here, even though the hourly does look like a reversal. Now everything looks like a reversal right now, but nothing is yet validated, guys. So you need to wait on this. The US dollar Mexican peso, again, we had a big rally on Fed Day. Well, I'm not looking to do anything too heavy here, other than maybe a retest of the 2020 level for me to be able to buy into this weakness. Now, the euro yen, on the other hand, euro yen is something that I do want to trade. This daily candle, completely and utterly rejecting that previous broken highs, is the trigger that I needed for me to go long on the euro yen. Now the 4-hour chart, is still bearish to me, right? So what we're going to do, and the risk to reward ratio is a little bit off, right? In the sense that our first target should be these lows, and if you look at what we have here right now, in the sense of risk to reward ratio, well, I mean, we have a 1 to 4 risk to reward ratio, so we could definitely be looking into buying here. I'm going to think about it, and I will let you know, guys, about that. Yeah. Let's have a look at the hourly, actually. The hourly is looking very bullish. We could, in fact, it just broke with the previous two highs. Massive bullish divergence. This is looking very good, actually. If you look at that reversal happening on the euro yen, so we are going to trade this one also. So I'll pause the video and I'll come back. All right, now that is done. So I'll be writing an analysis on that one. Let's have a look at the pound yen. I know a lot of you like to trade the pound yen. Again, the pound yen just bouncing from that key level on the daily. Let me show you that it is around the 150-180. Yep, that key level on the daily. Let's use and put it on all of my charts. Like this, right? So that's the key level that we are bouncing from, right? We are already have a long on the pound on the euro versus the yen, so it's pointless to do or to put another buy stop here, right? Pointless. But and because also the pound versus the yen, we have this massive and thick zone right there. So it would be very like burning money to put on a buy stop with such a strong target so close to our entry, which would mean that we would have a lower, less than 1-to-1 risk to reward ratio. Let's finish up with Bitcoin. Now, Bitcoin completely crashed this weekend. Let me just grab a sip of my coffee. Completely crashed this weekend. Now, the thing is that the hash rate, I think, I read about it. Hold on, let me show. Yeah, well, I couldn't find the article, but here's the chart. You know, this is Bitcoin's hash rate. The hash rate is what measures the power or the informational power of the Bitcoin network. It's fallen down again from its highs in May 2011. Now, this is because the efforts of the Chinese government to regulate and this market, right? A lot of miners have, and actually a lot of miners from China have turned down their rigs because they are looking to start mining elsewhere. So this is going to make for a weaker Bitcoin, at least on the very short term. So we won't be looking for buys at the bottom of this range, guys. Ethereum, I don't have an Ethereum position. Well, Ethereum is back at the bottom of that range, and I mean, it has been really hard to trade cryptos in this range. Um, Maybe we could be looking for some longs in Ethereum if we see somewhat some strength at the bottom. We need that weekly pivot to clear, of course, and we need those previous highs around the 22.55 to break. In fact, I'm going to put on an alert here that I am going to call uh, possible breakout. Right, so I'll be live today. Hope you guys can join me. Well, that's a big bullish push on on the DAX. Let's have a look at the FTSE. Now, very big bullish pushes on all equities. That is insane. So this is the first time I've seen this. Sadly, we are not in any of this. The one that I really liked was the Nasdaq, but again, a pretty weak level that it bounced from. I wasn't going to get involved. We might get some bearish momentum back into the market, so we can actually get involved in some longs. Let's wait and see what happens, right? So trade safe this week. Don't forget that I'll be live, and I'll see you guys inside.